Hello everyone and welcome to Day Trader S&P 500. Today is January 24th, 2021. This is Dale Woodson, editor of Woodson Wave Report, one of Timer Digest's top-ranked stock market timers. And while we've been around for 30 years, we've started our recent day trading or short-term report for subscribers. You can see our track record there. I average over 700 trades a year. So we moved all of our future trades over to Striker Securities. And if you don't want to sit in front of your computer all day and trade like I do, you can contact Striker Securities. They auto trade all of my signals. Okay, we have an important week this week, a lot to cover, and it's an important week this week. Let me get to our 2021 ideal Fibonacci price and time targets. A little review here. We have 5 waves up from the March lows. This move could be 1 of 5, and as you can see, we can go 2 down, 3 up, 4 down, and 5 up, or it could be the entire 5-wave primary degree rise from the 1987 low. We'll know after this top is in. We'll know early on in this decline what magnitude it is, if it's only correcting this 5-wave advance or the entire 5-wave advance from 1987. Getting a little bit ahead of ourselves. You can see our turn dates there. We have 2 different turn dates for the wave 2 low. One is a Fibonacci 55 days from the high, and the other is the next turn date in our turn date Fibonacci sequence. By the way, and I want to get to that sequence real quick here if we can. You can see we've been on this for several months now, but the Fibonacci time spiral table here shows how these Fibonacci dates have caught alternating highs and lows going all the way back to the September 2nd high. And as you can see, we've detailed this many times in the past. We don't need to go over all that. But what I want to point out is 2 things. The next turn date in the sequence is Monday the 24th. On that note, you'll notice the slippage, as I call it here, is all plus. Okay, the target date was 9/10. The actual turn date was 1 day later, a +1 slippage. Again, the 15th, 16th, +1. +1. You can see here the 34 days was a +4 trading days. Okay, then we had the 55 days for the low on October 30th was a +3, and our 89 was a +8. So while Monday marks a turn date high in the sequence, we might expect this week. We could see it into Wednesday, Thursday, Friday before this tops. You know, we can go back here. These are all extrapolated out on our 2021 forecast here, but as you can see this here, we're expecting it this week, okay? And then if the date changes, then these dates will change slightly, but we'll see what happens. This is an important week, and as you can see, we have a target price of $39.96, and that's a long way from where it is. We can get right into our Fibonacci analysis and Elliott Wave analysis of the S&P. Okay, you can see here our current, well, let me see what our current price is here. Let me just throw it in there for us here. Okay, in the cash market, we're at 38.41. This is the daily chart from the March lows. As you can see, we have a 1 up, a 2 down, 3 up, a 4 flat, and then we're looking at 1 and 2 of intermediate degree. Wave 3, we're expecting a target of 39.23 before a 4th wave pullback, and then wave 5 of 5 at our 39.96 target. So while that's 150 points away, a little bit more than that, so it might take the week to play out. We'll see how this is a very important week. We'll see if it gets up here and pulls back and it goes, if it hits that target price, if it hits that target turn date, a little slippage of +3 or +5 days, but that is the daily count, and that's where we are. Let's drill it down a little bit here. We can get into a 1-hour chart. You can see from that January 4th low, we have a 1 up, a 2 down, a 3 up, a 4 down, and then 5 isn't quite where we need it yet. You can see we have a 1, 2, and a A 3 we're expecting up here, and we're really drilling down a little bit here. Within that third, we have a 1, 2, 3, and a 4. The fourth has pulled back to a 382. We can still expect it to go to the 500, which is roughly 3820, or 3811 would be a Fibonacci 618 retracement. This 4 here would have to hold above this 1 here, which would complete this third wave here. I'm hoping not getting too much into the weeds with you guys here, but this fourth wave, by the way, this scared the heck out of everyone, but fourth waves cannot go below the first wave high. You can see the first wave high here is 37.52, and this low here went to 37.56. So it held, and that was our make or break point, and it held. As you can see from our make or break point, this market has moved up nicely and surpassed the wave 3 high. There's where wave 5 gains equality with 1. I think I have that at 38.72 on this scale, which is minute degree with these waves here from the January 4th low. Okay, we want to get in a little bit tighter here, and we look at that. This might be that. There's that January 4th low. You can see a 1 up, 2 down, 3. You can see here I've got the Fibonacci retracements. This went right to the 618. It held above the 4th, even though this 4th below here. The actual price is up here. 4 held above the wave 1 high, and now we're taking off in wave 5. You can see this is still developing. We have a 1 and a 2 and a 3. This pullback from what is now the all-time high on January 21st. We'll get in a little closer on this, okay? Give me a minute here to get this. You can see there I've marked the wave 1 high and how 4 held above it. There's the 4 low there, and there is the wave 1 high in blue. But let's look at this a little bit closer, and we can remove this because we already know that 4 was a 618. Within here, this is a little bit off. There's 2 there. There's 1 there. Okay, there's 3. And you can see ABC, C equals 0.618, 1.618 multiple right here, and 4 went from there. It looks like it's taken off, but let's look at this a little closer because this fourth wave is nothing. I think we don't want an extension, we want a retracement here. Okay, so we'll measure this third wave. Yeah, and you can see there that the fourth wave, the minimum 382 Fibonacci pullback is 38.25, and the low was only 38.30. So this fourth wave still could go lower to one of these Fibonacci targets here. Again, it would have to stay above the first wave high, and you can see the first wave high here is 38.01, and at 618 retracement is 38.02. Just like this fourth wave here scared everybody, but it held within 5 points of that wave 1 high. That's a higher degree. This internal fifth wave, you can see the pattern here, 1, 2, 3, and 4. So we'll see how this develops. It could be, instead of this being A, B, and C, let me remove that, and we could think that this is a bigger wave forming. Let me put this in here for you guys, show you what I'm thinking here. Okay, this could be A, this could be B, and C could end up down here. Okay, let me move this 4 out of the, move this 4 for now to here. So if that is the case, let's see how this is playing out, and we don't know that this is done going up yet, although it very well could be. So let's get that extension here. Let's see if this fourth wave, if that is A and that is B, look where C goes. C goes right here, a 1.618 multiple, right on the 618 retracement. So that looks a little better than this ABC here. That is A. That is probably B. Let's look for C to go right above the wave 1 high there. So our near-term targets for this fourth wave, which may be complete here but is probably not, would be 38.25, would be a 382, 38.13, and this looks to be 38.02. okay, above that high of, I think it was 38.01. Yes, it was 38.01. We want to throw in there that C equals A right here between the 382 and the 500 at 38.21. So we have a lot of targets here. If we like ideal Fibonacci and Elliott waves, then the ideal or perfection would be right here just above 3800. So once this high is taken out, which is 38.61 on the 21st, then 4 is complete. But unless or until it is, we allow for a decline to these levels. It'll be a very interesting week to see what plays out this week, okay? All right, we want to also get into Tesla, gold, and Bitcoin. Now, that's it on our S&P. Let me get over to Tesla here. And you can see from the March lows, and I got to move this out a little bit, okay? Tesla actually finished the second wave low on there, and you can see wave 3 and wave 4, that triangle there, and the thrust out of it. And as you can see, this is just extending and extending and extending. So we're looking at from the October 30th low, which corresponds with the S&P, the fourth wave. We've had a first wave up, a second wave down, and this subdivides into 1, 2, 3, 4, and then 5. So we drew this last week. We're looking for this 4 to come to one of these targets here at 781, 750, or 718 before going up in wave 5 of 3, and then a fourth wave correction and a fifth wave high. So this should be interesting to watch. Let me get a target here from this fourth wave low. Let's get an extension here from the first wave high. See where wave 3 goes. There we go. It gained equality right here, but it surpassed it. That's why I have the 3 here. Okay, that's perfect. We're looking at a 986 target for this wave 3 here. Then we would get a fourth wave pullback. So this is a smaller fourth wave pullback here. These pullbacks have been nothing. They're just small pullbacks and then zoom, zoom, zoom all the way up. So near term, we're looking for a high in wave 3 at 986, then a fourth wave pullback. So this may not even get to this 382 target of 781, but it's forming as a 1, 2, 3, 4. You can see it there. For actually, let's get into this a little bit closer because that looks like a triangle too. Let me zoom in on that. Bear with me. Yeah, that's definitely a triangle. Just now seeing, I haven't been paying too much attention, but you can see we have an A, B, C, D, E. Oh, that's a contracting triangle here. Let me run that in for you guys here real quick. From that high, we have an A down. B could be here. B is A here. C, D, E. And we didn't do that. Well, we started at the wrong place. Let me do that again. My apologies. Let me get this triangle going here. From here, we have A down, B up, C down, D up, E. And as you can see, let me draw those trend lines there for the triangle. It's a descending triangle. I'm sorry, it's a contracting triangle with, I don't know why that pops up there, but let's get our other trend line for the bottom of this. As you can see, there we go, contracting triangle with lower highs and higher lows, okay? Expect that to thrust upward and give us wave 5 of 3. Okay, moving on. We have gold. No changes in gold. From the March lows, we have a 1 up, a 2 down, a 3 up. Again, we've had this descending triangle in gold. We have the wave 3 throw under for wave 4. We wanted wave 4 to hold above the wave 1 high. It did to the T. You can see there it's almost exactly the same. Since then, we had a 5 waves up. I was concerned about this decline, and we added in this 786 retracement. It's not a common Fibonacci retracement, but it is one. Okay, and so far, it looks like this retracement has retraced 786% of this move up. Again, this would have to hold, but this count, the make or break, is right here at that wave 1 high, which is 1765 or thereabouts. Okay, so and here we have, it looks like 5 waves down. So this one breaks right here. Okay, if not, this holds. This definitely holds, and then we get wave 5 up. Again, 5 gains equality with 1 at a double top on 3. And I believe I have the more likely 1.618 multiple, which is 2273. So look for this low to hold, this low to hold, probably a move up to here where we get a double top and then a pullback and then a move up to 5 to 2273. So the gold analysis remains unchanged. Watch for those key support levels. And let's do Bitcoin because everybody's into Bitcoin. You can see here from the March lows, we had a 1 up, a 2 down. Wave 3 up looks like it topped on January 8th. And we have a 4th wave pullback to right about the 382 retracement level, which was 29,610. Okay, we can allow for one to 2576. I'm sorry, 25,776, or the 618 is 21,941. Okay, so this looks like it could be complete here, and we have wave 3 was a 3.618 multiple of 1 at 40,648. Let me just show you guys that here, and we'll get rid of this so we don't have too many lines confusing everyone. Let's get an extension, and there's the wave 1 high. I may not have this exactly right. Yeah, you can see there's the 3 equals 1 here, 3 equals 1.618 here, 3 equals 2.618 here, 3 equals 3.618. That's a powerful third wave up to this high on January 8th. We've had a pullback. Again, we had our targets there. But let's just say that that is the 4th wave low right near the what was a 382. And that's a big supposition, but let's make it for the purpose of this argument. Let's get an extension and assume that that wave 4 low was the low. Then where's our wave 5 targets? You can see 5 is a 1.618 at 42,904. We can go to the 2.618 is 51,649. So again, allow for those a pullback in 4 to lower lows. The other targets, which we had up there earlier in the red. Otherwise, if that low 4, that wave 4 low holds, then we're looking for a move up to 42,904 at a minimum, and that would be 5 barely beyond the wave 3 high, more likely to 2.618 or even higher, considering the length and strength of the wave 3 high. Okay, thank you everyone again for watching our channel, and I forgot to put that reminder out there, but thank you for subscribing, hitting the reminder bell, and the like button. We appreciate you guys patronizing our channel. Until next time, take care everyone.